On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again with another episode of Future Financial Strategies. This is our portfolio update for the end of year of 2025. I'm excited. We've got a few things we're going to talk about that are extra in addition to what we normally talk about in regards to the portfolio. And yeah, we're going to jump right on into it. So while we're sitting here, let's go ahead and make sure as we're filing in, you guys have liked the video. Please, that'd be muy beneficial. If you're not subscribed, especially if you've been here more than 2 times, I would like to also make sure that you guys are subscribed. Lastly, free way to support the channel, get the housekeeping out of the way, go ahead and share the video, get me out into the algorithm, put me on Facebook, put me on TikTok, put me on whatever. Also, feel free to clip this up. Just make sure to reference back to the channel, please, so that people can actually find the long form content for those that are looking to tap in and join the wolf pack. And yeah, so we're going to go ahead and jump right on into this. Let me switch to my portfolio updates. Actually, we're going to shift that around. So the first portfolio we're going to jump into, I'm going to go ahead and bring to the stage here. What you've got pulled up is the in-home banking portfolio. Now this for 2026, because we're going to be making some adjustments and some changes, and the reason we're doing this in this order is, oh, actually, we'll go ahead and just like drop that off for right now too. We're condensing down, so we've made some adjustments. So first and foremost, our Robinhood portfolio is paused. We're still holding the same positions that we've had over there. We're not adding anything to it right now. We are focused in. One of the things that we are doing is laser focusing in on completing functions in our portfolio. I see a lot of these channels and a lot of these content creators and myself as well have fallen for this, where we're making content and you just start scatterblast and have stuff to talk about. I am not, and I scatterblast less than most of these guys. Because I'm not a guru and this is actually my money and it's like my livelihood. So I don't have the privilege of just being like, oh yeah, I got an extra $100,000 to throw around to make content because I make umpteen $100,000 a year. I don't. So it's just not a benefit that I have. So I'm not going to attempt to try and do that because it just does not, it's not going to work for me. So hold on. One of the other things that we're going to do, we got micro machine myself down here. Oh, so if you split, I can't do that because it doesn't. Yeah, it doesn't work right. Okay. So what we're going to do is we are going to separate the views. Boom. Now, does that give you... There it goes. Yeah, see, okay, sorry. I was testing out a new function on Google. They have the ability to split, which is great for multitasking. I will be using it for my thumbnail generation. It does not work well for this show. But now I know that, which is cool. So, one of the things that we're doing is we're repurposing some of these portfolios. So one of the things that we had this as in-home banking, and we were doing selling off of things and stuff. And we will still be doing partially with that. And I will probably continue to show these portfolios until they get stupid big. I think Wall Street Trapper let you guys hang out with him until he was at about $1 million in his portfolio before he stopped showing it because he became a guru. He's not a guru, but like, I understand after a certain point, you start throwing big numbers at people and they start thinking that they're going to make $1 bazillion tomorrow because you made $1 bazillion because your portfolio is $1 million. So I will show receipts until we get to $1 million, I guess. I think that's the cutoff. Maybe $500,000. Who knows? Which we're nowhere close to that. So like you guys got plenty of time of looking at my receipts because I don't know that I'll ever have to grow these portfolios that big. And one of the things I think is going to be interesting is to show you that you can get out of the matrix. And by the matrix, I mean the financial entrapment that they have you going to work and being a slave indefinitely. And then you have these gurus on the internet that tell you that you're a slave because you actually are in fact a slave. It's an open air prison. And then they also tell you that in order to not be a slave, you got to have $10 million so that you can go buy a Bugatti just like them. And the funny thing is, if you don't need a Bugatti or a bazillion room mansion that costs $20,000 a month to keep the electricity and water running, and you just live like a normal human, you actually cannot have to go to work. You can choose to not go to work with way less money. And I'm going to show you exactly how that works. Or at least be in a position to where you don't have to go to work, which not having to go to work is pretty nice because then you don't have to be talked to crazy. You don't have to be disrespected. You don't have to be treated like the peasant that most of you are, that most of us are, because we have to be there. If you have to be there and this person has to pay you to show up and they want to do the bare minimum by you to get you to continue to show up, then why would they treat you well? Why would they not talk to you like you're stupid? Because if I'm paying you the bare minimum to show up here and you keep showing up because you have to, from my perspective, you are stupid. Like you are in fact stupid. And I know that probably doesn't feel good, but it's not meant to, because that's the reality that we live in. And when they don't have that carrot to dangle over you of, oh, well, you've got to pay your mortgage. How are you going to pay your bills? What if you get injured? How are you going to pay for that? What about your family? How are you going to pay for that? You have to pay to exist. You want to live under a roof, don't you? You like air conditioning. What about the internet? You like your cell phone. You like having the new iPhone every year, right? Get in here, peasant. And you're going to do what I tell you, and I'm going to talk to you however I want to because I can. And what I want for myself and for as many people as possible, because I don't just want it for me. I don't like talking to people like they're stupid. But if you're stupid, you know what? People are probably going to talk to you like so because you're stupid. So what I want for everyone is for them to take away that piece of leverage. I want this system that we live in to be forced. If you're going to have humans work for you, treat them as such. Treat them like they're people and understand that they have an existence that they care about just as much as you do for having them show up. And if you're going to do the bare minimum, the consequence for that is you do not get to have good employees or team members or family members, as they like to say. Because it's not family if you're taking advantage of them. It's not family if you're the only person eating and they're getting the scraps from your table and you throw that in their faces. It's not family if your existence, your ability to think that you're better than them, those below you, those who you employ, those who work for you. If without them, your business doesn't exist. Without them, your lifestyle doesn't exist. You are the parasite. They are not the parasites. You are, because you're extracting their life force to sustain yourself. And you could not do that without them. And the key to not having to exist and have your lifestyle extracted to give somebody else the ability to fulfill the dreams of themselves and the people that they deem worthy of being around them for their dream fulfillment is to have your financial situation in such a fashion that you don't need them. And you make it known that you don't need them, that this is an exchange. We are talking to people as equals. Matter of fact, I might be making as much as you are. I just need something to do today. Like, do you want somebody to come in and be awesome to be around and like make your business better? Cool. But like, don't talk to me like I'm crazy. Don't think I have to be here. Don't think that I won't get up and just leave and not have to come back and still have all my stuff paid and still have more money than you. Because like, if we're gonna do big bank versus little bank, let's do it and figure out who's extracting from who. Because if you take all these people away in this business, you don't exist. The market pays me. And I'd like to make it, I'm leaving the breadcrumbs and showing you exactly what I'm doing so that hopefully somebody can see this and make that same transition to where they don't have to, or they can navigate themselves into better positions that they're more suited for or more interested in, that maybe they don't pay as well. But it's something you actually want to do, something you want to learn how to do. You can career hop, you can job hop, you have the time to go learn stuff that you're actually interested in, that actually, you know, is interesting to you. And you get to actually explore that world versus having to take some job that you hate, go do mindless work because you have to pay a light bill. You have to pay a car. You have to have the newest car to impress all the other people. You've got to, I've got to go on 19 dates and impress these modern women so that I got to have money, so that you can stop being dysgenic, so that you can actually have a body that you're proud of, that you don't mind taking off your shirt when you go to the pool. So you can go outside and walk to the end of your driveway with your shirt off and you're not worried about looking like an idiot because you're built like a sack of potatoes, because you over accentuated on going to work because you believe that all that women want is money. And now you have to pay to have them around you. It's literally like you got to put a stake around your neck to get the dog to play with you. It's terrible. So that you can actually have an authentic existence. This gives you the time to do those things without being in crippling debt. Because there's nothing worse. I mean, both ends of it suck. It's like being in great shape and you're just broke. You got 2 pennies to scrape together. Like, that sucks. Being rich and in horrible shape and only getting to enjoy the money for like a couple of years because your body's wrecked and like you're a genetic nightmare. And then you get to expire from the planet talking about how women don't respect you because all you have is money and like you don't look capable because you're not capable because you're dysgenic. Like, We've got to, I want people to be able to make these choices so that way they can be like, you know what? You suck and you're in bad shape because you suck and you're in bad shape. You're broke because you're broke. It's not because nobody told you. It's not because you chose to not listen. You got people out here who are at different levels on this escape route, this underground railroad, if you would. And, you know, I'm letting people know what I'm doing. Like I said, I've said this a million times. I'll say it pretty much every video probably. When it gets to the point to where I'm telling you what I did, the opportunity isn't going to be the same for you as I'm telling you right now in this space what I'm doing. It's not going to be the same. You're going to be like, oh, well, like that doesn't work for everybody. Like, well, you know what? You could have listened when I was doing it. You didn't want to listen. Then you waited until now I'm telling you you're broke. And we're not in the same position. We're not in the same tax bracket. We're doing different stuff. So I'm telling you what I did to get here. It's not what I'm doing anymore. It's what I did. And once it gets to what I did, the opportunity might be completely gone because I'll have money. It won't matter then if high yield, it blew up. Like, I'll be rich by then. It won't matter. Like, I'll have figured something else out. I'll figure out what the next thing is. I'll have enough Bitcoin to where I can coast. What I'm doing and what is being done is way more important than what I did. Because what I'm doing is where I'm at. That's what's happening right now. So let's go ahead and get into this. Because like as we're going through, just understand this is a what I'm doing, not a what I did. These portfolios are growing. That's the reason I'm showing you a portfolio with $500.59 in it. As this portfolio grows and we strategically roll this out, it's going to become, you'll see what it becomes. So let's jump on into this. So we starting off with the in-home banking. This has been repurposed. This is actually going to become a reoccurring expense / strategic savings account. That's what this portfolio is doing. Now, when we talk about strategic savings, what are we talking about? We're doing STRK, where every year we pay an additional payment to push ourselves out an additional month on our mortgage payment, because I have a mortgage payment because I believe in using debt strategically. And is it a 15-year mortgage? No, it is not. It's not. It's not. It's a 30-year mortgage. Yeah, the infamous 30-year mortgage. Now, do I believe in 50-year mortgages? I'm like, why wouldn't you stretch out to 50? Well, specifically, it doesn't make sense. Like, that's a diminishing return loan, and I don't need that. But 30, sweet spot, in my opinion. I'll tell you why. Could I pay it off in 15 years? Absolutely. But what's the opportunity cost of that? Why would I pay off something in 15 years that I'm paying 3% on when I can buy Bitcoin and have a CAGR of 50%? Why would I give up the Bitcoin to pay the house off? What benefit am I getting? Do I never have to pay anything on the house again? No, because we live in a system where we rent our stuff from the government after we pay it off. So I still have to pay taxes to own this house. And I'm responsible for the taxes at that point. But you don't interest. Why do I care about 3% interest when my CAGR, my compound annual growth rate on my Bitcoin, is 50%? Maybe goes down to 30%. Why would I care about paying this back? What I care about is having a cushion in case stuff breaks bad. The other thing that I do care about is having enough money to just pay it off if I needed to. And that's where STRK comes in, Strike, from an offering of preferred from MicroStrategy. Now, Strike, what I do is I buy an additional share every month. Anytime, well, after I pay my consumer debt off and I get to a space where I have a little bit of extra money to throw at my mortgage, all of the extra money every year will go into Strike, with the intent of getting a cash pool in here that is equivalent to the remainder of my mortgage. So instead of actually paying the mortgage down and paying the principal down and not paying all that interest, I will pay into Strike and then let this compound in and of itself, because this pays 8% a year. It's an arbitrage of 5% over my 3.25% mortgage. And I'll just go ahead and keep taking that money and then just have this as an insurance. So if stuff does go bad and it's like, hey, you're at hard times, no more income's coming in, batten down the hatches, I can sell this position, or better yet, take the income off this position at that point and be able to take a chunk of those mortgage payments out with this position specifically. Moving on, we get down into our ETFs. We got a little bit of dust. This TRBO, this is a very old portfolio, and this is something that blew up, and it's worth $0, and I can't get rid of it, and I don't know how. I'm gonna have to call I'm gonna put this on my list of grievances when I call Charles Schwab to get them to lower my margin interest. Over here we have a little bit of dust left over from LFGY. I might put a whole share in there or something, just so that way there's a whole share. I don't know. We might use that for a position for one of our savings. We'll see. We will see. But what we've got going now is YBTY, which is in here. And what these positions specifically, every position in here, I will have one per reoccurring expense that I have to pay. And the goal is to get it to where it generates whatever that expense is in income every month, and then just take the income from here and use that to pay bills. So what we're going to do, I think the first one that we're going to be looking at is our cell phone bill. So I will be stacking, actually, this is probably going to become something else, but we're starting off with the cell phone bill because I'm factoring that in at $100 a month. And what we'll do is we're going to run these hot. I'm going to do exactly what I do with my other portfolios. We're not going to be launching this as far as using it until next year. So what I'm going to do is I'll get the amount in here needed to facilitate $100 a month. Once we get to that point, I will just set this to drip. and I'm going to just let it drip until next year. It's going to be interesting to see how this works out. But if it drips to a certain amount to where I could make it into something that's way less volatile that pays monthly. So for instance, a strike or SATA, not a strike, a stretch or SATA, I will move that over into that position and just have it live there stably. So that way you don't have to worry about the volatility. So for instance, for my phone, I'm allocating myself $100 a month for my cell phone bill for my phone service. Right now I am using Mint Mobile, so that's actually at max $45 a month. So that would actually cover the cell phone service and probably start touching on being able to save up for a new phone every year. Which would be $100 a month, 10%, so that's $1,200 a year. Hold on a second, let me get my calculator back out. So you do 1,200 divided by 0.1. So if that position gets to $12,000, I could get $12,000 in stretch, have it not move around that much, and be able to pull that income off of that. And I think that's going to be the end all be all of this portfolio, is getting to the point to where you have all of my reoccurring bills come out of here and then build it up to where it gets to the point to where like you're like, hey, like if I can move this over into stretch or SATA and factor that at about 10% and, move it over and then just let it sit there. And it's like a checking account that you have that pays for all your stuff. That's my be all end all goal. Now I know that we're looking at doing that out of the primary income account as well. But again, efficiencies. I like to have efficiencies and redundancies. So we're overshooting all of our goals. And then over here, we're going to have it be in a very not as volatile position, and we're gonna go with that because if I need $1,200 a year, then like maybe I'd look at some of these positions that are between 30 and 50%, and you put it in those positions, and then I can also turn margin on, so I don't have to sell off anything, and you can just let those drip, and then you just pull out of the margin or pay it off of the off the distributions. So that's our in-home banking. We're going to move on to the next one. I got myself Micro Machine down here. And this one's actually been pretty active. We got some new positions. We're going to be doing some videos on them. We got the long-term holdings, which we are currently sitting at $1,728.70. What do we have in here? We've got some stuff. We've got things going on. As we are going into this portfolio actually is our total. We're back in the green. We cross back over into the green. We've got 2, 3, 4, 5 positions, one of which is a moonshot, which normally I would reserve for the Robinhood portfolio, but we're staying focused on being in the Schwab ecosystem until a couple of these portfolios are up and running, and then we will shift our focus over to the Robinhood portfolio, and that will come back into the lexicon at that point. Because as we're rounding out these last few months of having to work, because I still could very much just decide that I am going to actually not go to work for a little bit after we get to the points that we need to get after we hit to some of these thresholds. And I don't until then, we will be wielding our W-2 income very strategically. Because we have X amount of time to do these things. And yeah, that's just kind of the way that it's gonna work. So right now, we are living in the Charles Schwab ecosystem. I will set everything up in this ecosystem first. We'll move from one portfolio to the other portfolio, and we're going to just keep narrowing it down and drilling into it until we get to the points that we need to get to. And then we'll move over to the Robinhood portfolio, because that's going to be the walking around spending money. And that's kind of the last thing on my priority list. Like, I'm being fully invested. I've got enough to do with what I want to do as is. So in here we've added a few positions. So first and foremost, we have ASST, which is Strive. We're using one of their preferreds, which is SATA. Well, their preferred, which is SATA. They are also a Bitcoin company. I am looking at them as the poor man's MicroStrategy, because this is sub $1. We have a goal this year of getting to 1,000 shares, of which we were at 397. Once we hit 1,000, then the funds that we had going over here will go towards, hopefully scooping up some MicroStrategy or some MSII. And with the goal of building up towards getting some MicroStrategy. Next, we have Giant Mining Corp, BFGFF. This is a position that we're going to be throwing $100 at. It's a moonshot position. It is a moonshot position, and it is what it is. We're gonna let it ride. It's gonna live over here in the long-term portfolio. We'll just see what it does. Obviously, we have our Charles Schwab. Since we're still active in this account, every month we will be purchasing another share. So we purchased our Charles Schwab share. Obviously that position's been going well for us. Next we have our SoFi. We took out the loan to buy the Bimmer. We took out a personal loan to do that, and we did not go the automotive loan route. And the reason we did that was because it gave us over $10,000 to get into the income portfolio, which is also helping service this loan as we are fully invested. It's coming out of the brokerage account. So like, this gave us another boost to do this. And I'm figured during the time frame that I am using that product, that I would like to own that company, because they're making money off of me. And if a company's going to make money off of me, I believe that if I have a good experience with it, it's easy to use, which it was. I did have a good experience setting up, getting my SoFi loan. The money showed up super fast. That I would go ahead and own some shares of said company. And honestly, this is another high amount flywheel that I will be looking at using as well. One of the things I like about it is I'm like, hey, like, depending on what the rates are, next time this rolls back around, since they'll know that I'll be good for paying the money back as soon as that loan's paid off, cranking it again. Now I could use that for improvements around the house. I can use it for, a bunch of other stuff, but like, also I could just take the money, because they're just giving you money, and put it in the market. As long as you pay the loan back, it's like, this is what it is. So this is one of those things where it's put it into my ecosystem. And I like it. It's easy to use again, and we'll probably be using it again in a different fashion, because the loan that I took was for 2 years. So after the last payment, we'll be able to wrench on it again, and I probably will not be buying another vehicle. I love my vehicle, honestly. So I probably won't be buying another vehicle at that point, unless I'm looking for something that's, a little bit more fun. It definitely won't be something that I'll be driving every day. It'll be like something that I drive a couple of times a week or something like that. If I go that route, we'll see. And second to last but not least, we have XXI, which is, again, another Bitcoin exposure. This is kind of looking at the youth. It's Jack Mahler's company, 21 Capital. I'm pretty excited about it. They're not marketing as a pure Bitcoin treasury. They're actually going to provide services, which I'm kind of interested to see what they come up with. Young energy. I like it. Amplified Bitcoin exposure. I'm interested to see what comes of it. We're dollar cost averaging. I'm looking at a target of 250 shares for this year. And I am starting with the less expensive Bitcoin exposure positions to start off the year, because when the Metaplanet purchase I have to buy bigger amounts because they're not listed here locally on our exchanges. So when you buy Metaplanet, you are actually buying in the foreign market. So you have to pay for that. It's like $50 a purchase. So like if it's not over $1,000 or more, it's not really worth it for me, because like you're paying a 10% premium on top of the premium you're already paying to get into the position to make that purchase. And I made that mistake early on, and I did consolidate this back in, but Metaplanet is also on my list of treasuries that I want exposure to in regards to my amplified Bitcoin exposure. Now, down here, I do have some income positions, and these are strategic positions. I'm going to do a video specifically on my take on how I'm doing these positions. And it's TSII, because one of the long-term holdings that I do want is Tesla. Unfortunately, Tesla shares are pretty expensive, especially for me at this juncture. Now, once we get the consumer debt paid off and we can just go full bore and like getting very strategic with our income and how it's coming in, that's going to be a different conversation. But for this portfolio and where I'm sitting at monetarily right now, like while I could absolutely buy a share of Tesla every 2 weeks, like a full share, it would impede my my end goal of what I'm looking at doing with my income. So what we're doing is we're putting it in TSII, which has a good record for compounding. Obviously, Tesla's been getting beat on, but I'm buying these shares, and then after we cross the threshold where I can get a share of Tesla stock, I will sell these shares off and buy a share of actual Tesla stock. So this goes from down here to up here, and then we'll rinse and repeat. One of the other things I'm looking at is doing the exact same thing with MicroStrategy, because while MicroStrategy is down, it's not necessarily in the strike range of being able to buy full shares with the 10% that I get to shoot over here with my additional Bitcoin exposure savings. But after I get this one done, I think I'm going to start doing MSII, which is also offered by Rex Shares, and doing the same play with that, because while there is a lot of volatility in these, you're also compounding as you go, because I do have drip set on for these, and as it's dripping, you get to build up that cash pool position, so the total return is not negative 7.37%. And you can build the position up until you get to where you can buy the full share. And so I'll be doing that with Tesla and MicroStrategy to kind of get those extra shares in there. So moving forward, I'll have a split. You'll see TSII and MSII in there, and we'll be starting that with our distributions next week, provided we get over $800, because that gives us the 10% to kick over into this portfolio, at which point I should have a share of at least I should be crossing the threshold to get a full share of Tesla. And then we'll be starting that build up for our MicroStrategy buy also. So moving on to the big show and what everybody's been waiting for, we're going to jump right on into the primary income portfolio. Now this one, we're starting to make some moves. Like, as you can see, we got a little bit of a margin pull in there right now, and we're still over $40,000, which is nice. Being fully invested, like that should, even with market volatility, we should be provided that we're just not getting completely decimated. But generally speaking, with the spread that I've got, if we're getting completely decimated, we're getting completely decimated all over the place. So it's kind of one of those things. Starting up here at the top, we have our preferreds, which is kind of our cash reserve position. We're currently running SATA and STRC. And after doing some research, it's going to be predominantly STRC at this juncture. And the reason being is this portfolio actually, I need more margin in here. Not because we're living hand to mouth, but it's just because I would like to expand. Like I could pay my debt off faster if I still had, $20,000 in margin to play with. And unfortunately, these positions give different margin requirements. So STRC gives me more margin than SATA, which gives me no margin. I've found that a lot of my positions, which are higher risk, give me no margin because they're high risk. So most of my margin is coming from WPay, which the position actually needs to get trimmed down a little bit. It really does. But because I want it to be no more than 10% of what this portfolio is going to be. And our target for this portfolio is to get it to $60,000. Which doesn't help me much in a lot of ways. So we're going to be moving forward, we're just going to be buying STRC shares, which actually kind of hurts my soul a little bit because it's no longer on sale. I mean, sub 100 is on sale, but it's just not, it doesn't make me feel good. I'm just going to be honest. But it increases the margin and it's a good cash reserve position. So as I'm looking at this is what I look at as the checking section of my portfolio, which is currently sitting at just under, it's $389.32. Which I need a little bit more money in there because during dire straits, hard times, we can tap this and sell off to buy equities down here to buy these ETFs. So let's go into our ETF mix. We got a few more positions. So we still have blocks, which was previously going to be a cash reserve position as well. We are going to be adding back to this position because it's preferential for margin. It's also crypto related, so it's still on brand. I like it. Next, we have PLTW, which is our Palantir play. We have more to build into that because I do want to get to like 100 shares. I like to have all my stuff at 100 shares at minimum. That's been doing well. We've been getting paid off of it. Can't complain. Obviously, these are swing trades for the roundhill. We're kind of at a dip. And as we're riding through this dip, we're going to be looking at the total return. We're going to wait for this to spike up to around 10%, and then we'll nix that position and roll it into something else that is paying income and wait for the market to decline again. That's how I use roundhill specifically. So you buy into stuff on the dip, you get paid while it's dipping, you just keep buying and buying and buying, and then when it spikes up, that uncapped upside, you take advantage of that. You gotta watch these. These are very much more active, even more active than what I'm doing with the roundhill position. So I am watching the market. I am looking and, waiting for those signs that Palantir's either going up or going down. And if I hit that 10% mark, I normally will sell off 100 shares or so, depending on how many shares I've got. So like if this gets up to 100 shares and that's all we've got, and then it hits that mark, we'll sell that off and probably roll it into something like blocks and maybe one of the other riskier ones to bolster the margin that we've got. And then wait for another dip. Just keep an eye out for when Palantir drops 5% or something like that, and then buy back in and start the process over. Semi, SEMY from graniteshares. I'm liking that. It's semiconductor space. Obviously, that's going to be important. This one is doing pretty well. I keep an eye on these. Like I said, I'm normally under normal circumstances, unless it's margin tied, which is why WPay is still there, because I haven't figured out where I want to put that money yet, because I don't want to have less margin. But I am not adding to my WPay position any longer. But Semi is, in that sweet spot. It's around, I'd say at this point, because we're still buying it, we're not fully positioned yet, but we're at like -2% total return, because like this is volatile. It's going down right now. But it's paying well. So Semi's doing what it needs to do. We getting a good paycheck off that every week. TSLW, which is Tesla. I am doubled up on Tesla because Tesla's in my long-term portfolio. So if it's in my long-term portfolio, there's no reason it's not going to be over here. We've got 400 shares. We're waiting to touch 10% total return again. Tesla took a little bit of a dip. It was on a little bit of a run. I am noticing and fine-tuning my strategy. 10% is when we're taking that first cut from now on. We're sitting at about even. It's like maybe like, well, we're actually going to look at these in Snowball Analytics to give the context here in a second. It's a good payer. It's a solid payer. It isn't necessarily in the percentage range that I like, but again, these are swing trade positions that I get to get paid on. So as we're waiting for that round back up, we're keeping an eye on that. TSYY is actually back in buy range. Not bad. It's, still, it went a little bit red, so we're buying it again because it was on sale. And when our Tesla positions go on sale, we buy. So this position I am holding longer. And yeah, it's a solid payer. We get a good grip of change off this. Obviously, the pay has gone down, and we are keeping an eye on it, because this is one of those positions where we might shift this out into something else if we start getting towards our stop loss. As much as I like TSYY, I will not live the cautionary tale of the Redditors. I'm not going to ride it until I'm -60% total return. Like, I'm going to do what I need to do to get where I need to get. Like, this is not an emotional deal. Like, yes, this has been a stellar part of my portfolio. If it becomes a non-stellar part of my portfolio, I have other positions that I can put this in that I am also enjoying and having good returns with, where, we can, because there's just no reason to ride something to zero. Like, that's just complete ignorance, especially with your own money. Like, if that's your actual money. Also, if it's your actual money, why are you on Reddit crying publicly about it versus fixing the situation? Like, did you not learn anything? Like, why? It's crazy to me. Next, we've got WPay, which is actually turned into a margin position. We're at 195 shares. I might buy 5 more shares. I'm not going to lie, just to get it to around 200, and then just let it sit there, because I do get a good portion of margin from this, but I want the position total to be at somewhere around $6,000, because I want this to be at 10%. But it is what it is. I don't hate it. It pays, but I was kind of hoping it would be closer to $100, and we're not at $100, and that kind of makes me sad, especially since it is for me, one of the lower ends of the spectrum is WPay for me. As far as like what I'm getting paid, like most of my stuff is in the 100% range, and like as the portfolio has grown, we are looking at kind of scaling that back a little bit, and maybe getting into like the 50% range, which is like WPay still falls within that, and it's a lot less volatile in my opinion, granted, within their ecosystem, since this is an ecosystem fund, it's pulling MSTW. It's got some like anchors in there that are just like nuking the total from the inside. But you know, it is what it is. You got to take the good with the bad. And like when the market's good, this entire fund's going to be amazing. And you know, in green pastures, it is what it is. It's riding through these volatile times, these down markets, where you kind of have to steel yourself, and you have to also be looking from a strategic perspective. Because when I moved out of ulty, UTLY, I did not understand the ramifications of moving that position. Granted, I still would have moved it. Like I wasn't going to ride it to zero. Like that's crazy, dog. Like I wasn't going to take that hit in that reverse split. Wasn't happening. And, you know, getting out of a position with a good taste in your mouth is way better than getting out of a position and being like, this is a complete, oh, I hate this position. I hate this tool because I lost all this money. Like I didn't lose a bunch of money on ulti. I made money with ulti total return. It's cool. So stop losses are your friend. Like that's all I can say. It's like you've got to monitor and understand how far into the red you're going to go. And for me, I have an acceptable level of red that I'm like, cool, like that's cost of doing business. Okay, cool, move it. But ulti had a low margin requirement, which put me in a position to where my margin went from being able to have access to over $10,000 easy to get cash out to now I have around, I think, $6,000 now. And it's one of those things I'm going to do a video on about when you're setting these up, if you're going to use margin, because those margin requirements matter. And it's something that honestly, until a couple of days ago, and I mean a couple of days ago is in like right around New Year's 2026, like right at the end of the year, did I start actually doing the research and being like, okay, like what's the difference between these funds? And I go, oh yeah, so this has 100% maintenance requirements. Like I can't borrow against this. Oh, this also has 100% maintenance requirement. Can't borrow against this. And then you go look at other stuff and it's like, oh yeah, this has 0. This has 50. This has 30. The way that you set yourself up strategically within your portfolios based on how you use them matter. Now, running high yield, you're probably not going to have access to, generally speaking, you're not going to have access to a bunch of margin unless you set your portfolio up to do that. Me personally, I did not, from that perspective, set my portfolio up to do that. Moving forward, some of the positions that we put in here are going to be strategic because I don't really want to have like a bazillion positions. I want maybe 10. And I'm at 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, the cash reserve. 10 active positions. The cash reserves I'm not worried about. But 10 of these, I've got 3 openings. And like, obviously, as you get towards stop loss, because everything's not going to just sit in here forever, these will rotate. That's just what it is. And I will take note of like where I jumped off. You gotta make notes of where you jumped off the train and where you're willing to get back on the train, and not ride stuff until you're horribly in the red. Like that just doesn't make financial sense. And if you're not financially literate, you shouldn't be doing this. And if you're not capable of seeing any red numbers, you shouldn't be doing this. If you're not capable of tracking these portfolios in the way that they need to be tracked, which is based on total return, in my personal opinion, and how I do it, which has been very effective for me, you shouldn't be doing it. You shouldn't touch it. Like if you're not going to use the tool appropriately or understand how the tools work, don't use the tool. Doesn't mean you got to talk trash about it, but like if you use a screw gun and you use screws, you don't need to talk trash about hammers and nails. They just got a different job. That's not what you use it for. Okay. So that the perspective has to be there. The next thing, that the last one that we've got is YBTY, which is kind of my new golden child. which is why I'm like, yeah, I'm only going to ride stuff a certain amount down easily because I can just sell it and move it over into YBTY, which gives me high income every week. And it's diversified and it's a top performer, which also makes me so happy. So happy. I've been waiting for some of these other companies like Roundhill. If they did a top performer, that would be amazing as well. They don't have it. You have to get into the whole ecosystem, and Yield Boost also has you get into the whole ecosystem. But any ecosystem that has MicroStrategy in it at this juncture is getting beat up, dude. Like it drags. It's an anchor. That's just what it is. So I don't personally want to be involved in that ecosystem. There's a couple of other positions that I have on the watch list that I'm looking at getting in here in some form or fashion. But as it sits right now, we'll be looking a lot at blocks, which obviously crypto taking a beating, but I like blocks and I will be adding back in because it also helps my margin and it's above 30% payer. So yeah, that's kind of where I'm at with things for this portfolio. And now we're going to jump over and give the context because that is also an important thing to do. Now, this isn't going to be 100% up to date because we did some buys today because it was payday. It was our first payday of the year, which is the 2nd of January, which is when I'm doing this recording. But we can look at the numbers based on like what we had in the hopper from earlier in the week rolling into New Year's. So as it sits right now, the portfolio, we've got our important numbers. We're sitting at $41,279.12. Oh, yeah, I got one more thing I want to show too after this. Nice. Our total profit, we're at 1.8%, which is still in the green total profit, which is very, for me, if it stays flat, awesome. Because I got paid and I use that money to buy long-term investments and pay off debt, which is instant wins. So keeping us flat, that is great for me. Our passive income percentage is sitting at flat at 100. Basically, it's 100.56%. That is awesome. When we look at the breakdown on this, we have, our Tesla positions getting smaller, TSLW's getting a little bit smaller. W pays the next big chunk. We got Semi that's growing, PLTW. What's this little sliver right here? Oh, okay. Yeah, that's kind of where we're at. We scroll down here to the calendar. They did the dividend growth for 2024 to 2025, and basically every month except for October of 2024, we brought in more money than we did in November of 2025. So we were making some adjustments. December, blowout. I mean, most of these months we beat. Between August and November, which was when we were making adjustments, we were fighting some down markets. We were just, fighting for our lives from starting in August. You see that like we start dropping in income. Like we had a masterful $4,830 in August. Like that was a great month. We had that triple pay on Misty, and that was when we started having to get divesting from the Misty position because we weren't just going to be able to build everything around Misty. And like that's when we started diversifying out, and the rest is history. But we're sitting at 71% to goal for passive income goal of $60,000 a year. That's pretty awesome. So it's got us pushed out into 2027, which I don't. So this is the part that I'm confused on, because like when we go into here and we look at this, because it was saying that we were going to hit this in 2026. I don't see how we don't hit this in 2026. Oh, it's overshooting that. Okay, that makes sense. Because I was about to say, I was like, yeah, like this was saying that we were gonna be okay, so that's where it's at currently. So we're 43K a year. So yeah, we're gonna be hitting our goal because like this is showing achievable in 1 year. So by 2027. And 2027, with the way that we have it set up now, it's projecting us at 116,000 a year. And that's great for me. I'll take it. Let's go into the portfolio and take a look at that. So as we're sitting right now with blocks, obviously we sold that off and secured a loss on that because we had to deploy some cash because the market was going down. We've got blocks, which we're never doing that again. Also, we'll dip into margin, but like I want the cash reserves to be there to bolster the margin is what we're looking at. So blocks, we are currently sitting at neg 2354 in total profit. Like that was, tax loss harvest. Let's call it what it is. PLTW, we are currently down 8.5%. Palantir's been on a downward trend, which is great since we're doing our buys still. So we're buying that dip. So we're going to keep eating into that. SATA from Strive, we're up 2.23%. Semi sitting flat. We're at 180 shares. That dividend yield is at present is at present 131.95%. Strive is at 13.02%, which is awesome. They're under $100, so they're probably doing what they need to do to get us up to $100. Stretch STRC, we're at 10.79%, which they're kicking it up to 11% for the month of January, which I'm excited about. Got a couple of shares of that. TSLW, we are up 2% on Stride as well, which is nice. TSLW, we are at negative 2.4%. Again, we'll probably just start buying more of this if we're not going to catch that wave. And like we have our understanding that we are looking at 10% plus, we start trying to offload some of those shares. And that's the way we're going to be moving with that. TSYY, we're down 3.54%. Again, we bought some today because this is on sale. TSYY, depending on what the base is doing, we might start offloading out of that position. We'll see. I'll keep buying, and if I can't buy my way up to keep this flat, then it's going to be what it's going to be. Like, I don't want to be down too far, like around 5%. I will just start moving over to YBTY, to be honest. WPay, again, this is a margin position, and we keep that. It's floating around 10% with those anchors in there. It's the market. I mean, it is diversified, and it is most of my margin, and we're sitting at 46.76%. YBTY is at 94.51%, and we are negative total return of 3.43%, but we are still actively buying this position as well. So as those shares come in, we're going to be buying against that, and it's paying strong. WPay is kind of doing a few things that we don't like. So we have the NAV is going down. Obviously, a lot of its positions, especially that MicroStrategy position, are just getting decimated. Like I look at the because like MicroStrategy at this point, I'm just going to buy shares. Like that's the range that it's in. So, which could be cool for purchasing some some MSTW because it's like, okay, so like how much lower are we going? But on that same note, it's like it's dragging this portfolio down. So as I sit here and I'm looking at how we're navigating and how we're moving through this process, I again, strategically, I go, okay, so where else could we park this money? Like, obviously, monetarily, every month, this is kind of the baseline, so it's still paying, but I don't like seeing this NAV just getting destroyed and like also we're total return down 10%. Like it's just like that for me is not great, but it's also when you get in and did you keep buying, which I'm not, because this isn't going to be the majority of the portfolio, which is why these numbers, why the total return is getting beat on the way that it is, because I did not continue buying this because it was dragging my percentages down. So that also, because I want it to be around 100%, there's other positions that I'd rather have that in. So looking at that, it's like, okay, so like maybe we should be, you know, kind of trying to figure out what we're doing with that. But yeah, that's kind of where we're at. I'm gonna go ahead and leave it there. That's kind of what I got for this. Overall, 2024 has been great. Or 2025. 2024 was great too, but 2025 has been great. We came out from a net worth perspective, not necessarily where we wanted to be, because we obviously came up about $13,897.46 under where we were this time last year. Yeah, we'll see what the end of January looks like. Like, I mean, the only thing that we can do is keep pushing forward. Every year isn't going to be an up year. I just can't say that year over year we're running the bag up. But from an income perspective, we are definitely running the bag up. Like, that has been dialed. I think we're pretty much dialed in on that. Now it's the growth piece of it, but since everything that we do revolves around Bitcoin, because that's my thesis, you got to take your L's. You have to take your L's. Like, you got to be able to ride through the bad time. And what am I doing? Buying as much more Bitcoin and more Bitcoin exposure as much as I can get my hands on. My grubby little hands. I'm like, we're either building up income or we're getting additional Bitcoin exposure. And that's kind of where I'm at with it. I don't have too much of a care for having a year where things didn't look good. Like, through the Bitcoin bear markets, if I was doing this video recording of my monthly financials, there were probably years during that it was not good. But the not good years, we just kept buying. And then the subsequent good years, when Bitcoin, the cycle came back in our favor, everything gets less expensive over time. The CAGR is what it is. The compound annual growth rate of Bitcoin is what it is. About 50% right now and running. Looking at it stabilizing at about 20 to 30%. That's not bad at all. I'll take those numbers all day. So till next month, this has been the portfolio end of year update for 2025. We closed out strong as we could. Obviously, volatile market, an administration that is affecting the market with tweets. Got to do what you got to do, but you know what? We're gonna win no matter what. We're on the hunt. We're on the grind. Till next month. Welcome to 2026. We are locked in. Don't forget to like, share, and subscribe. And we will see you next month. Till then, it's your boy Reckless Ray and Arrow, and I'm out.
Money on my mind. Yeah. Focus, got no time for games. Nah, I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag. right, that's what I came for.